Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be asking Steve about how the market will react to potential Russian invasion of the Ukraine. Also, Steve will answer questions about the IRA contribution limits, as well as give his take on Frontier and Spirit Airlines merger. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. We had a question come in this weekend regarding a Fox News story yesterday saying that the Russian invasion of the Ukraine is imminent. It reads, Steve might want to address this in more detail in your next video. I'm curious to know what our playbook is if Putin invades the Ukraine. I gotta think the market will tank.
All right, thanks, Allison, for that intro there. And I think we had some internet issues right at the beginning. Sorry, everybody. Here's the quote. So again, thanks for the client that asked the question. That's the format we're going to go to. Is instead of Allison trying to surf CNBC.com and see what's interesting to ask me, it's better off if questions roll in, and she'll let you know at the end of the show how to do that. So here's the quote that's on the screen right now. It's from Jake Sullivan. He's the National Security Advisor. And basically, the headline, though, of the article and everything else was Russian invasion in days, right? So you get this idea that like everything's happening, right now, if you will. Get that back to you. There you go. So listen to what this says, though. We are in the window, Sullivan said in an interview on Fox News Sunday. Any day now, Russia could take military action against Ukraine, or it could be a couple of weeks from now, or Russia could choose to take the diplomatic path instead. So, for those of you that know nothing of what's going on over there, when you hear this paragraph, what do you now know more than you didn't know 30 seconds ago? Nothing, right? He said it could be today, it could be any day now, it could be in a couple of weeks, or it could never happen. I mean, I like the job he's doing as the national security advisor, so I'm not trying to pick apart what he said. I'm picking apart the headline because the headline that went out is this thing's imminent, and it's not, right? So we're going to take a look about a little history here. I do have a couple of master's degrees, one in military art and history, as well as or art and science, excuse me, and another one in air power art and science that helps me kind of digest this for you. But pull this over to the main screen here. So here's a map. So those that aren't necessarily fluent in everything, I guess I can't move it. In everything that's going on and where this is in the world. But here's the contested area here. Here's the area red's Russia. You have the Ukraine in blue. Poland, which is where the U.S. is flowing troops now. Biden said that we're going to have 1,700 troops flow into the region. That's going to be into Poland. I don't know exactly where. I never did fly. I flew a little bit in Europe, but I never flew any combat in Europe. But Poland's over here where his right elbow is. So I'd expect that's where our ground troops as well as our air forces are going to be located. So the area in here, this was, it happened in 2014. So this is the contested area. And then much of the southern Ukraine is obviously kind of in Putin's sights, if you will. So the question is from the client is, how does this affect how's this going to affect the market? I think the market's going to tank. Well, good news. Let's check the tape because this has happened before. It happened in 2014, which is, historically not that long ago. What is up? Why is that not going 2014? So for some reason here, what is the issue? All right, for now, I'll have to do it interactively. But in 2014, it happened, and the dates, I wrote them down earlier. It was February 20th through May 2nd of 2014. I have it right here. So you would immediately look, by checking the tape, you would look at how did the market act during that time? Well, I'm going to share this screen out to you right here that shows you. It's like, okay, well, immediately this pops up and you say, well, it must be here, right? Because this is where the market tanked in 2014. No, it was over here. So February of, get this back on the screen here, apply. So here is all of 2014, the year. So February 20th is right here is where the invasion took and the market went higher for a while, didn't react at all. Off into April, we had our low here right before tax day. Don't know what was going on in the war at that time, but then it was all over on May 2nd. So if you track the, what happened from the beginning to the end, the market's up, right? So am I trying to tell you it was good for the market? No, I'm trying to tell you that these things are often not correlated to the market overall. So you can't really tell what's going to happen in the overall market. You have a battle of, what's going on with our economy, which is the main driver, what's going on with earnings, with companies, what's going on with interest rates. Those things affect the market a lot more than what's going on the other side of the world. Now, if it blows up into a major theater war, then obviously that's going to be a game changer. But the history of the United States has been, we're going to go in with some financial sanctions. Excuse me. We did win the Cold War that way. So go in heavy, hurt them financially, make them regret their decision to do whatever they decide to do until they undo it. If we have to go kinetic, it'll start surgically. It'll be in small amounts and in just enough to try to get them to change their mind on what they're doing. So overall, I don't think it's going to affect the market a whole lot. But what it will affect, I'm going to switch to another screen here, is oil. So this, what's popping up right now is you can see the plunge in, there we go, the plunge in oil, and I've got it highlighted there at the bottom. In February, this again is 2014, the upward trend in prices in oil accelerated 5.3% as tensions between Russia, a major petroleum producer, and Ukraine stoked fears that energy supplies could be disrupted. So yeah, absolutely, right? So when you look at the 2014 chart of oil, which I have popping up right now, for some reason, I can't just click to these one to the other. I have to pull them up individually. But, this is 2014, and you saw the run up back early in the year. Let me get this back to, there we go. So this is your February through May timeframe, and it continued up to the middle of the year, and then it kind of reset. So if anything, if you wanted to play this, you would be doing it as a trader. And if you look at our oil prices already, which I'm coming to you now on CNBC, is DIG being the proxy. This is a real-time chart of where we are since 2020. Let's just go a 1-year chart. That'll be easier. So you can see that we're basically double where we were, 6 months ago. A lot of people blame the administration. You can blame whatever you want. But the fact that there's some supply chain issues and some oil issues going on over in Europe because of the Russian potential invasion of the Ukraine, if you were going to do anything, if you were a trader, you could trade this. And of course, once nothing happens or something happens and it stops, you would turn around and short oil. So anyhow, that's kind of my take. Don't sweat it as far as we're not changing our playbook. We're still going best of breed companies and rocking on.
Our next question comes in from a client asking, I turned 50 years old later this year. Can I change my monthly allotment from $500 to $583 now, or do I need to wait? Thanks.
All right, that is a great question, and many people have, and of course you only have it the one time, right? So so what we have here is whenever you try to find your own answer, you always put IRS up front and then ask your question into Google. So you make sure you get the IRS as your primary source. So that's what we have in this case. Here's your IRA contribution limits. As you can see in this section right here, that hard for me to highlight exactly that piece, but you can see 6,000 is the current contribution if you are below 50. Once you turn 50, so at age 50 or older here, it goes to that 7,000. So when the client's asking about 500 versus 583, that math comes from if you are under age 50, which, probably most of the listeners are, if you set it up for $500 a month, you will maximize your IRA. You don't have to think about it again. 500 just comes rolling in. When the market, dollar cost average with that $500. Some people do it annually with the full amount, the 6,000. I prefer that myself. But if you're doing the 500 a month, once you turn 50, obviously, if you continue doing that, you're going to be 1,000 shy of the max. So that's where the 583 comes from. If you think of it from a math perspective, since you did 500 in January, you would technically subtract that from 7,000, that's 6,500, and then divide that by 11 to get your monthly amount. But the big picture here is the year you turn 50 is considered one calendar year. So you don't have to wait until your birthday to increase the amount. You can actually do it now, and you probably should do it now to smooth out that cash flow. So good question. And the answer is yes, you can go 583 right away.
Last question. Frontier Airlines agreed to purchase Spirit Airlines in a $2.9 billion stock and cash deal this weekend. What's your take on this?
All right. Well, so when you hear Spirit and Frontier, I know some of you go, oh, I would never fly those, so I don't really care. Well, yeah, I think you do care, just from a perspective of they serve a purpose, if you will, from keeping the prices low on the majors, if you will. So these are the discounters. There's also Allegiant. There's also JetBlue, some other smaller players in the space. But these players, mere existing, keep prices low because Southwest can't jack up their fares, or American or Delta or United, because they have these discounters out there. So it'll be interesting to see what happens, and if this could even be blocked by the Department of Justice, if you will, for it to go through. But when you think of airlines, so I don't think it's going to change. I think it will get approved. I don't think it'll really change the space for certainly investing in airlines, which I don't like anyway, but I'll tell you that for a reason. But as a consumer, it could drive prices up because you're combining the discounters, so there's less competition or less downward price pressure as a consumer out there. But there are people out there that say, hey, airlines are a good investment, especially with COVID. Well, I want to show you this chart that I popped up. This is the Global Jets ETF, and I will tell you that why I don't like them as an investment. So it opened back here in 2015, in March of 2015. If you got in on day one, you are, 7 years later down money. So that's not where you want to be, right? But here's why I don't like airlines. So first of all, heavy capital requirement for the airlines themselves, just a ridiculous amount to buy the actual equipment, being the planes there and everything else to service the planes, the airport spots and the maintenance equipment and the luggage equipment and all that stuff. That's one, is heavy intensive capital. Two, you have very expensive workforce. Across the board, most of them are specialty. Obviously, pilots from flight attendants have FAA qualifications. Also with aircraft maintenance, heavy. You can't just have everybody working on planes. They have a series of qualifications themselves. Most of these folks are unionized. So again, they have pressure against management, which is also pressure against the shareholder. And then the last one, of course, then they have all the other administrative stuff that goes along with that as far as ticketing agents and things. But for largely specialized sort of workforce that has power. And then the last one, they're only days from bankruptcy. So if you remember 9/11, worrying about the airplanes airlines going bankrupt and largely going out of business, that's not something that's going to get my money. I think the margin is razor thin, and you have these bad weather delays and workforce strikes, and all these things can bring the airlines to their knees. So that's why I don't invest personally in the airlines.
Thank you, Steve. Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.